Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 4th of May. So this week we've got quite a bit of interesting news coming out in the markets. We've got non-farm payrolls on Friday. We've got UK interest rate decisions and Monetary Policy Committee meeting on Thursday. And we've also got a number of key markets at some key technical turning points. And this is in relation to the COVID-19 market-related crashes and retracements on those particular instruments. So could be quite an interesting week as the market progresses. So let's take a look at a few markets here that we're keeping an eye on and some of the opportunities that we're looking for. So if we come across to the the S&P 500 first of all, and take a look at this on the weekly time frame, we can see that from the technical perspective, the market has had from the COVID-19 crash here, the market's retraced 61.8% retracement of the initial move, which also happened to coincide with the 2,900 technical level here, where the market's found key support and resistance in the past. So last week, the market rejected off this level and couldn't hold virtually any of the prices gained last week, and closed it closed at the low here. Now the market has now taken out this lower level around to 28.20, and you can see that there is also significant key support and resistance around that level as well. And since then, and this is since Sunday evening, the market's broken below that level and starting to look particularly weak. So from a technical perspective here, the short side of this market is certainly starting to look a little bit more probable and a little bit more sort of ominous for the next move. If we come down the time frames and take a look at this on the 4-hour time frame, and just sort of zoom in here, you can see that the 28 sort of level here, we've got around 28.20, 28.10. There's a zone through here where the market's found key support and resistance in the past. The market gapped down on Sunday evening. It's now rallied up to test that level and now starting to reject off it. So from a technical perspective here, if we see a rejection off this level, we'll be looking for shorter opportunities here to the short side, and we've got some decent sized trading windows already technically in place here on the mid to lower time frames. So if we come in now and take a look at the commodities, now the commodity that we're most keen on at the moment, or think is the most of interest, is silver. So if we take a look at silver here on the weekly chart time frame, we can see that the market here has been, we've had the initial COVID-19 crash, we've had the retracement. The market's already started to weaken off here and started to get through some sort of areas of support, and it's coming up to some rather sort of significant levels. Below these levels really does sort of open up for the next move down to the low side there. You can see if we tighten up these levels, they're around sort of 1477 here. Now if we come and take a look at this on the daily time frame, you can see these levels a little bit more clearly. We've got 1477. We've also got $15 as well. But more importantly, we can see that the general sort of trend here has been to the short side. We've had lower highs forming, we've had equal lows, and if the market gets below these levels, then there is some potential sort of move to the short side. We've got a potential trading window down to around $14, and then possibly down here towards the lows in extension. So again, if we come and take a look at this on the 4-hour time frame, we can see the sort of $15 level. We're roughly around where the market's sort of sitting at the moment within the context of this sort of sideways consolidation. Below this level does open up sort of trading windows to the short side, and we'll certainly be looking at opportunities for short potential trades. Now, if we come to the currency markets, there's a lot of currency markets again which are looking sort of rather interesting and at key decision points. One here that we like is the Kiwi Yen. So again, if we take a look at this on the weekly chart, we can see the initial sort of retracement after the sort of COVID-19 related market move to the short side here. But for the past couple of weeks, the market's been, well, sort of consolidating here with a couple of doji style candles, and it's just above the 64 level here. So the 64 level is the level that we're interested in. If market does break below 64, then it does again open up potential sort of trading windows to the short side and maybe a move down to sort of retest the lows as well. So at the moment, the market's sort of stuck within a range here between sort of 64 to 66, as you can see. The market's tested that 64 level a few times, and if we come and take a look at this again on the 4-hour time frame, you can see how many times the market sort of tested this sort of price point. So again, we're looking at opportunities here. Clearly there's a range here, and the market could go either way if it breaks out of this range, but we're keeping a close eye on this 64 level to the short side. If it does take this level out, we've got another sort of smaller trading window down to 63, and then possibly, well, not a lot in the way down to the sort of 62 level, and maybe beyond towards those lows as well. So there's a few markets there that we're keeping a close eye on in the trading room at the start of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.